This is Business Extra, and I'm Salim Essaid. We're watching the markets respond to the headlines out of Iran and Israel. But first, let's get oriented. We're recording this episode on Tuesday afternoon in Abu Dhabi. At this point, Iran and Israel have agreed to a ceasefire after 12 days of intense war, sparked by an Israeli attack on Iran, which the US had entered over the weekend by launching its own strikes on Iranian nuclear sites. We're fresh off an Iranian retaliatory attack on the Al Udeid US airbase in Qatar, the largest US airbase in the region, on Monday night.
It's the largest base. It's enormous, frankly.
In just a few hours after that, US President Donald Trump said Israel and Iran had agreed to a ceasefire. Then, Israel said Iran breached that ceasefire on Tuesday, a claim that Iran denied. Frankly, there's been a lot to catch up on in the last few days.
Yeah, I do. They violated it, but Israel violated it too. Israel, as soon as we made the deal, they came out and they dropped a load of bombs, the likes of which I'd never seen before. The biggest load that we've seen. I'm not happy with Israel.
We're going to cover the economy side today, focusing specifically on some of the next-door neighbors closest in proximity to the escalation, the Gulf states. Gulf leaders have been on alert for triggers on several fronts. For one, potential damage to nuclear sites, like the Bushehr nuclear power plant in Iran, located just across the pond, that is the Arabian Gulf. The Gulf has also kept a close watch on the Strait of Hormuz, the narrow passage in the Gulf where about a fifth of the world's oil flows through to power the globe, and which Iran had threatened to close.
And as Eric mentioned, the Strait of Hormuz may close, and in fact, oil futures are spiking.
Despite the announcement of a ceasefire, all of these are still major factors in the Gulf's economic well-being and stability. Let's get into what happened, what's next, and what we're on the lookout for.
The geopolitical environment, I think there may be the risk of spillovers, which will impact the growth trajectory of the GCC countries.
I traveled to Riyadh on Sunday to attend a gathering of the World Bank, centered around a report it put out last week on the state of the GCC countries' economies. There, I sat down with the World Bank's GCC countries director, Safaa Al-Kogali. Here's the conversation.
I think this report is really timely because it focuses on what the GCC countries have been doing and what impact of or the effect of those policies that they've been putting in place, the reforms, in their overall economies or economic growth. The diversification agenda in all the GCC countries has actually paid off in maintaining and stabilizing the economies, especially during times when oil production was reduced voluntarily due to the OPEC Plus decisions. So the non-oil sector was able to actually sustain the economy with its growth. This is as a result of the diversification agenda. This is the investments that were put in non-oil sectors across the GCC countries. So this is an important result from the report. The second one is more around the outlook. We think that as the non-oil sector continues to be strong and growing, with the easing off of the oil production cuts, that the countries of the GCC have good growth prospects in the short and medium term.
But given that these countries have been diversifying for a while, why is there such growth in the past year?
Each country has a separate journey, right? If you take the UAE, they have indeed been diversifying, and the non-oil sector, the test was when oil production was lower. Because these countries depended so much on the oil sector for growth, that the test was when the contribution of the oil sector to the economy declined. A lot of the GCC is still pretty dependent on oil markets. Secondly, those fluctuations in the oil markets in terms of production, in terms of prices, will have an impact on the fiscal balance of these countries and also the external balance, right? Because they export a lot of the oil. And then the third and final point that I think is important in the report is around fiscal policy and the use of fiscal policy. We saw that actually implementing fiscal spending during downturns had a positive impact. The counter-cyclical fiscal policy is important. So during downturns, it's important to continue spending, but it must be smart spending.
Future preparedness, definitely. And it's not
Absolutely.
just one incident like this. You mentioned fiscal spending and how they should do it. Do you have others that could benefit not just during this time, but also forward as recommendations?
Yeah. So look, I think they're in the right trajectory. However, they need to accelerate the diversification agenda. They're still not in the clear, right? Still, oil is the greater part of revenues for the GCC countries, for some more than others, let me put it this way.
But if oil is going up, though, isn't that a positive thing then? If prices are going up, I mean, that's maybe the argument that some would make.
Some will make on the short term, right? Because when you think of oil prices going up, but then you think of shipping costs going up, and you think of commodity prices going up and inflationary pressures, right? There's a lot that could be happening, which then dilutes the impact, right? So you want to make sure, and especially you asked about longer term. Longer term, you want to ensure that you have fiscal sustainability, that these are not just policies or reforms that are done one-off or over a short period of time, but you want to make sure you have an expenditure framework that is long-term. You also want to ensure that you diversify your revenue sources. I mean, we talk a lot about fiscal spending, but fiscal revenue, it becomes very important. And I think looking into taxation, new taxes that will generate income, new investments that will in the non-oil sector that would generate more income. These are things that the countries of the GCC will need to continue to push forward.
Are there certain countries that have maybe diversified more, invested in to get revenue from other streams versus just the oil and gas sector? And has that put them in a better position during this time of uncertainty as a result of the war?
Yeah, I wouldn't say as a result of the war yet, but I would say countries that diversified are more resilient to fluctuations in markets, are more resilient to uncertainty, economic uncertainty or trade uncertainty globally. As I mentioned, UAE has started the diversification agenda a while back, and currently, with 74% of the GDP being from the non-oil sector, puts them in a stronger position, right? The more you diversify, the more you have different opportunities to deal with crises that come your way. When you put all your eggs in one bag and something happens to that bag, then you're in greater trouble. I think it's fiscal discipline.
We'll be right back.
Are you interested in modern Middle Eastern culture? Want to learn more about which museums, concerts, movies, books and music are popular in the Arab region? And how is the world viewed from another lens? Listen to the Culture Bites podcast from the National News in Abu Dhabi every Thursday. Join me, Inas Rafai, and my co-host, Farah Andrews, as we discuss all the stories and events shaping the arts and culture scene here in the UAE.
The impact of war between Israel and Iran and the market volatility that's come with it is about more than the numbers. Foreign investors with eyes on the Gulf are growing wary of the effects of this instability. Arti Nagraj is with us. She's our deputy business editor here at The National, and she's been covering the markets closely in the wake of the Israel-Iran war. Arti, thanks for coming on.
Happy to be here, Salim. Good to speak on this topic since we've been covering it so extensively of late.
Right? I mean, I feel like that's an understatement almost. But tell us, what's been happening?
So it's been really interesting to see if you look at the Gulf stock markets, and we've been tracking today, looking at just how markets have moved since the war started on the 13th to today. Overall, the growth has been steady. I mean, you look at the DFM, growth is 2.29%, and ADX or Saudi Tadawul Index, it's less than a 1% increase that's happened. But during that period, there have been days when, there's been a sharp dip and then, it's picked back up. So markets have been expecting that, and all of the analysts we've spoken to were expecting that the war wouldn't escalate too much. Markets were factoring it in as well. I think oil has been one area of where we've seen extreme volatility in a sense. You saw on the biggest spike came on the 13th itself when the attack happened, up 13%. Now, oil going up affects all of us significantly across the world. inflation comes in, you factor in all of the various sectors that are affected. And so I think that's been an area of key focus during this period.
And with all that said, it seems like it's been constant uncertainty for the past 2 weeks of what's going to happen. One of the big things that's getting swayed by the events in the news is foreign direct investment. Can you talk about the role of foreign direct investment and how that plays into the Gulf?
I think, again, with FDI, when you look at it, it's a long-term timeline that you're looking at. So you will have short-term events which could affect movement. But I think on a longer term, the Gulf countries have diversified their economy significantly away from oil. And I think the way that all of the different reforms, regulatory reforms that they've brought in to attract investment has been very successful. We saw the UAE last year just recently announce its FDI for 2024 up 48%. I mean, that's quite significant. Now, there could be a short-term impact. You had your interview with the World Bank's GCC director who said, that it could have an impact on a longer term, a spillover effect is what she called it. But I think if you look at the trends that we've seen, the GCC countries have established themselves as being stable. They have policies in place to protect the people, lot of incentives to attract talent in, and diversifying into sectors, especially like technology, for instance. So that attracts a lot of people, a lot of entrepreneurs. You have golden visas, you have all of that coming in. So I think from an FDI perspective, they've put in all those steps in place, the Gulf countries, to ensure that they can protect themselves from these shocks.
Exactly. That's maybe different than it was like 20 years ago. So they're better positioned to be able to withstand these shocks than they would have back then. And you mentioned that it was different for stock prices versus oil prices. Can you talk about what the impact has been on oil and what that means, or what that has meant, I would say, over the past 2 weeks?
So oil, of course, has been extremely volatile, primarily because Iran, one, is a key market, oil exporting market, has been supplying to China despite all of the sanctions that have been imposed on it by the West. And also, it, along with Oman, it controls the Strait of Hormuz. Now, Strait of Hormuz is key because that's responsible for the outflow of about a fifth of the world's hydrocarbon output. So there was a lot of tension about, would Iran take that extreme step of blocking the strait? Now, one of the analysts I was speaking to yesterday, she was telling me that a lot of it is also a lot of noise more than reality, because it affects Iran as well. Iran's economy is going through was already struggling. So it would hit them as well rather than just the others. But it is also driven by sentiment. The markets are driven by sentiment. So you had on the 13th, prices immediately shoot up 13%. And then Brent closed the day about 7% higher. But then you had prices go up and down. I think the highest it went was yesterday, Monday, where it touched like $81. And today it's back down, like significantly back down to $67. So as we are speaking on Tuesday. So I think the market movement at this point is hard to predict. Oil remains volatile because it remains subject to what everybody's anticipating what could happen next, and nobody can predict for sure. But I think the overall expectation is that there will be a ceasefire. And if there is a ceasefire which continues, in that case, oil will go back to where maybe Goldman Sachs expects end of the year, $60 is what they expect. Rystad today was saying maybe around $70. So, I mean, at one point it could reach $130 if things go wrong. So there remains that volatility spectrum. But I think that as of now, people we've been speaking to believe that with things calming down, it would go back further down.
It's interesting that what you said about the Strait of Hormuz, because that was on everyone's minds of would it be closed. But it sounds like there's no real intention of closing it, but the reaction was still real from markets, and that's what caused price increases as a result.
Absolutely, yeah. I think you did have that token announcement. Again, we're not sure how true or not it was, but coming out from the Iranian parliament saying, somebody tweeting something about the Iranian parliament planning to go ahead with closing the strait, but then it required the further approval from the top, from the Supreme National Council. So those are small things, but then it's sentiment. It adds up, right? Like you rightly said. I think it moves markets, it frightens investors, and then you see extreme volatility happening as a result of that.
We can't predict what's going to happen next, but let's look at different scenarios. So if the ceasefire agreement holds, what can we expect from oil markets over the next few weeks?
I think initially oil markets will drop. I mean, today has already seen a significant drop. The bombing on Monday, it fell 7%, close 7% lower despite going to the highest. So I think it will have a period where it dips. Now, apart from this short-term event that's happening, we have to also remember that oil is affected by tariff uncertainty because we still don't know what is going on there. That's almost gone out of the news at this point, but that's still a huge factor because that will determine where inflation is at is another big factor to factor in. So all of that will determine in terms of economic growth, where we are at, demand, how strong is demand going to be, which will, if demand keeps up with supply, then prices will go up. But as of now, I think with the short-term situation, if the ceasefire holds, I think then price will start to factor in other elements, global economic events, and what comes next to decide how movement would be.
Yeah, and on the other side, if it doesn't, if either the ceasefire doesn't hold or more attacks take place or one side just doesn't accept the deal, what can we expect if, for example, this goes on for weeks, months, basically looking at the long-term effect of a constant ongoing conflict?
I think then for oil specifically, it would also depend on something like, let's say, if the strait is actually closed or partially closed, then for sure prices are going to go through the roof. But I think that's something everybody wants to avoid. So it's an absolute worst case scenario. And as the person I was speaking to was saying, that's very, very unlikely to happen. So I think the expectation from the markets and from analysts is that the ceasefire holds, that it doesn't continue to escalate. And in terms of markets, everybody's, I think, almost hoping. You have too much going on outside already. There's too much going on. So there is expectation that this holds. And for Iran as well, I mean, Israel is already fighting one war in Gaza. And for Iran, their economy is in shambles. So I think from an economic perspective as well, the expectation is that they would respect the ceasefire and continue this way. But again, no looking glass, no idea what comes next.
Definitely. And let's hope for economies and humankind alike that this doesn't go on.
Absolutely.
Yeah. But Arti, thank you for joining us.
Thank you so much for having me.
That's all for this episode of Business Extra from The National. You can follow our live coverage on Iran and Israel and more at our site, and check out The National's full podcast offering wherever you stream platforms. And one more thing, before you go, we want to hear from you. Help us improve our podcast by taking our 2-minute listener survey. You can find the link in this episode's show notes. This episode was produced by Yasmin Al-Taji. Arthur Edison is our audio engineer. Our podcast editor is Duat Farid. And I've been your host, Salim Essaid.